Well, from high-yield bonds to another place that's yielding well for Canadians, housing prices in most Canadian cities are on the rise again. Toronto and Vancouver leading the charge. Last month in March, we had Canadian average prices going up by 0.3%. So the question is, how much longer can this go in for? Are there any signs of trouble ahead? Joining me from Vancouver, one of our favorite guests, Ripley. He's a real estate analyst and the publisher of the Canadian Housing Price Charts to take a technical look at what's happening with the housing markets. Brian, how are you?
Hi, Kim. I'm good, thanks. Now we're into low-yield real estate.
There we go, from high-yield bonds to low-yield real estate. I think the yield depends on where you live, and you're going to help us talk about that. But let's talk a bit about how you look at the housing market, because you basically see it as two separate categories, if you would, within housing. Is that right?
Yeah, we can see from looking at the high end of real estate, which is now the single-family detached house market. It's just taken off like a rocket ship, and there's a lot of wealth that's been moved into that market on a huge bet that prices are going to continue to rise. Whereas in the strata market, especially in condos where it's overbuilt in Toronto and Vancouver, you know, those markets are at a high level of risk, I think.
I think we're going to pull some data later on, but if I'm not reading this correct, the Vancouver strata market, as you talked about it, it's been flat since 2007.
Yeah, that's right. We don't have a chart of that today, but if you look at my chart on my website, you'll see that it's been the strata market's been in a narrow range since the bottom of 2007 going into the crash of 2009.
Why is that?
I think one is supply, two, the prices, and three, earnings levels are probably not that good. Every time I turn on BNN, I see more part-time jobs being created and fewer full-time jobs being created. So I think that has a big impact.
Okay, let's bring up one of the charts that you brought for us today. This is something, it's taking a look at single-family detached homes, and you've got this titled, it's something called MLS Sales Exhaustion. So there's a whole lot of lines on this chart, Brian. We've got it up. Can you tell us what you see here, what's interesting?
Okay, so the thing that we should note about the sales plot line is that it's annualized. So every data point on that chart is a seasonally adjusted annual figure. And we can see that from last month to this month, it took a big drop. Plus, I put in that dashed line to show that perhaps the trend is down in national sales. Whereas the rest of the three lines are the single-family detached houses in Calgary, Toronto, and Vancouver. And, you know, they've been enjoying a great bull market for the last 6-7 years.
This is an incredible chart when you look at it again. So for people who are just tuning in, we've got the Toronto, which is the red line, single-family detached. We've got Calgary, the purple line on the bottom. Vancouver up at the top, of course, the blue line, and then the Canada, I guess, amalgamated. Is the Canadian line a sum of all these urban centers?
It's the sum of all the residential sales in Canada, the MLS residential national sales. So that includes all the strata and all the single family.
Huh. So
everything.
Go ahead.
I'm sorry. Go ahead.
No, you. We're being good Canadians. You go first.
I was just going to say that it's all the residential sales in Canada.
So when you look at that chart, you know, what does that tell you, being a chartist, if you will, about what's going to happen?
Well, I think there's a bit of a divergence going on. We've got a slowdown in the real estate market nationally, and then, of course, there are the exceptional markets, which we know about, Vancouver, Calgary, Toronto, and then within those markets are exceptional locations. And money is still pouring into what I suppose buyers consider trophy properties that they must own, despite the fact that fundamentally they're quite well overpriced.
Huh. And when you say fundamentally well overpriced, I mean, what is your definition of fundamentally?
Well, can you earn a yield from the purchase of your real estate? Can you rent it out and get an acceptable yield that will take care of the risk of holding that property for the next 10 years? I think it's very doubtful.
Huh. Let's take a look at this next chart you brought for us. This is housing rentals that we're taking a look. And these are housing rentals listed, if I'm right here, on Craigslist, Kijiji,
yeah,
and Airbnb.
Yeah, Craigslist, Kijiji, and Airbnb. So you can see immediately that in Toronto and Montreal, there's a huge supply of both rentals and listings for sale. And in Vancouver, not so much, but still quite a bit for Vancouver's population. By the way, the number right adjacent the city name is the population of that city in millions.
So what does that tell you? When you look at this chart, what does that tell you?
There's a lot of supply. There's no shortage of housing. If you can't afford to buy something, you can rent something very easily. By the way, Jason Kirby from Maclean's magazine did a little digging around in the condo market in Toronto, and he quoted CMHC investment condo vacancy rate somewhere between 5 and 10%. They don't even really know what it is, but they think it's quite high. And the other thing he quoted was that the rental values have dropped by probably 1.5%. So I think that if they've only dropped 1.5%, I think you're looking at probably a much bigger vacancy rate in the next 12 to 18 months, and I think you're going to see a lot softer rental prices.
Okay, well, let me ask you, I've only got 30 seconds left, Brian, but if you and I are sitting and having this conversation again 6 months from now, which I do hope we will, what are you going to be telling me about the real estate market in Canada?
Well, I'm going to say that I hope you have done your homework before you buy that piece of real estate that you're lusting after. Do a simple cash flow projection and make sure that you're comparing renting and buying pretty closely, because I think renting is going to represent much better value.
Brian, always a pleasure. Thanks so much for joining us.
Okay, you're welcome.
Brian Ripley, he's a real estate analyst and publisher of the Canadian Housing Pricing Charts. Still ahead, we're going to take a look at why automakers are making big pushes into eco-friendly vehicles, even if consumers aren't. It's coming up.